They say Treasury bill is less risky investment, but there are things you need to consider before investing in Treasury bills. Treasury bills are monies you lend to the government, and in return, you get profits, which can be as high as 29% or 30% interest rate per year. Far better than savings, right?
You get it?
But there are things the financial institutions are hiding from you when you want to invest in Treasury bills. That is why I made this video to let you know these things before you invest your money into T-bills. You need to understand what Treasury bills are. So Treasury bills are short-term government securities issued by the Bank of Ghana to raise funds for the government. They have different maturity dates, which include 91 days, 180, or 364 days. They are sold at discounts, meaning you buy them less than their face value. And upon maturity, you receive the full face value, with the difference being the interest earned. The second thing to note is you have to know the current interest rates. Check the Bank of Ghana's website for the discount rates. Compare rates for 91-day, 182-day, and 364-day bills to choose the most suitable maturity period based on your financial goals. You don't just invest in anything. You have to know your financial goal, whether you want a short term or a long term. You can monitor Bank of Ghana's weekly auctions or publications on their website for the most up-to-date rates. The third point you need to note when investing in Treasury bill is to monitor the market conditions. Look at broader market trends such as inflation rates and compare the inflation rate to the Treasury bill rate. So if inflation rate is higher than Treasury bill rate, then you are not going to make any money. You need to consider the policy rate set by the Bank of Ghana, which affect Treasury bill yields. The next thing you need to understand is the risk inflation. If inflation is high, the real return on your Treasury bill might be negligible or negative. Currency rate is another thing you need to consider. If you have financial obligation in foreign currency, a depreciation of the Ghana cedi could erode your purchasing power. The next thing to consider is to assess your liquidity needs. Treasury bills are locked in for duration of their term. Ensure you won't need such funds before the maturity date, unless you plan to sell them in the secondary market, which could result in a lower return. So if you have money that you want to invest in a short term, less than 3 months, please do not put your money in Treasury bill, because you will not be able to get your money back until the 3 months is due or the 6 month is due. Else, you're going to lose some part of the money. The next thing you need to consider is to evaluate risk. Treasury bills are backed by the government, making them a low-risk investment. However, it's prudent to monitor the country's economic stability and credit worthiness to ensure confidence in repayment. So you should consider the repayment performance of the government in Treasury bills before you invest in it. And so far, we've never heard anything crazy about a government not being able to pay Treasury bills. The next thing you need to know is to understand Treasury bill process. You can purchase Treasury bills through licensed financial institutions like the bank or brokerage firms such as IC Securities or Blackstar Brokerage. Ensure your intermediary is credible and offer a competitive rate. Some banks allow you to purchase off Treasury bill through their mobile banking apps, adding convenience to investors. You need to also consider compound interest option. Some financial institutions offer a rollover option where the principal and the interest are reinvested upon maturity. This allows your investment to grow at a compound rate. You also need to diversify your investments. Avoid putting all your money into one security like Treasury bill. Diversify across various asset classes such as equities, mutual funds, or even commodities to balance your risk and maximize returns. Also, you need to know your redemption process. You have to understand how you will redeem your investment when it matures. Most banks will credit your bank account directly, but it's good to still clarify this in advance. So Treasury bills are a secure and straightforward way to grow your investment. However, to maximize your returns, it's essential to consider factors like interest rates, inflation, liquidity needs, and overall economic environment. By conducting thorough research and aligning your investments with financial goals, you can make an informed decisions that enhances your financial stability. If you found this video helpful, please don't forget to like this video and subscribe if you are new here. And also share it to your friends for them to know what to consider when they want to invest in Treasury bill. Let me know in the comment section your view about Treasury bills. And feel free to ask any question below in the comments. I'll always be available to answer your questions. See you in my next video.